I consistently hear from people that the main reason they don't want to invest money in the stock market is because they're scared to lose money. Now stick around to find out why people lose money in the stock market and how you can avoid it.
Why you not here with me? Can you break bread with me? Why you switch phones like gold?
How's it going, guys? Ryan here and welcome to another episode of Stock Market Basics, where I'm going to share with you my 3 key reasons that people lose money on the stock market. Now, I want to talk to you about why people lose money and how you can avoid making the same mistakes that they do. Coming in at number 1 is a lack of education. Just like any other skill, you need to learn, you need to train, you need to understand what the stock market is, how it operates, what the influencing factors are, and how to trade, how to invest, how to identify companies. What people need to realize is that much like any other career path or job, you need to learn. So you'd go to university to study to become a doctor. You get an apprenticeship to become a carpenter. Trading's exactly the same. You need to study, but unfortunately, unlike most mainstream jobs, there's no fixed sort of courses on stock trading and that sort of thing. There's a few emerging ones coming out, but there's never been anything where, hey, I can go to university to go study how to trade stocks or how to invest. One of the first things you want to understand is what is the difference between trading and investing. These are two completely different things, and if you don't know what you're doing, then you're going to fail. I mean, investing is often a long-term outlook. You're looking at the company itself. You're trying to understand, is this company going to be profitable? Is the share price going to increase over an extended period of time? You're forward-looking and you're looking at the current operations. Whereas if you're trading, you're in and out of stocks. You don't really care about the fundamentals. You care about the catalysts. You care about the technical indicators that are going to pop off. When you're trading specifically, you really want to be looking for those patterns that identify, hey, this is going to go up in price, or if you're shorting, hey, this is going to go down in price. You need to be able to get in and get out really quick, and you need to be able to read the charts in order to do so. Unfortunately, a lot of people just jump straight into the stock market and they put a large amount of money down because their friend recommended that, hey, this share's going to go up. And unfortunately, most of the time, these people will have absolutely no idea what they're talking about and they're being falsely led on. As a result, the stock ends up crashing, going down, losing their money, and everyone goes, no thank you, I'm not trading in the stock market again because I've just lost all that money. And it quite frankly scares people off. And having an actual education, understanding, not relying on other people to tell you, hey, buy this, hey, sell this, is fundamental in being successful in the stock market long term. Number 2 on my list is having an investment strategy or trading plan in place so that you know exactly what you're doing when you first buy that stock and when you're going to sell it. Effectively, if you don't have this plan in place, you're essentially gambling with your money. You may as well just go to the casino because you're blindly going in. Even if you know the stock's good, if you don't have an exit position or an exit strategy if things go south, you're likely to lose money. Touching on that point further, you want to identify a price or a percentage where you're going to say, hey, I'm going to sell out of this stock because I think it's going down too much. So for me, that's generally 5 to 10% if I'm trading. If I'm investing, it might be a bit of a different scenario because I've got more of a long-term outlook. And the same with when you're trying to sell. Of course, you've got to let your winners run, but then on the other hand, you need to understand that it's okay to take profit and look at the share and say, hey, this is overcooked. There's way too much buying that's occurred. This is going to drop quite quickly. If you've entered a trade and immediately the price starts to drop, you need to have identified that point where you're going to get out. The fundamental rule here is to cut your losses quickly. $100 loss is so much better than a $1,000 loss at the end of the day. Even if the stock does reverse, that could be a potential loss that you've mitigated. Number 3 on the list, and the biggest reason why people lose on the stock market, simply comes down to inexperience. You really need to be involved and you need to practice and live and breathe trading and investing if you want to be successful at it. As I said before, you really need to study, and a great way to do this is to download a trading application that allows you to practice. You're essentially playing along the live stock market but with fake money, and that allows you to enter positions, exit positions without risking losing any of your money at all, and hone your skills. Two key skills that you need to develop are patience and discipline. Patience is required for longer term investments where you're waiting for the price to rise. You're waiting for the company to often develop or start up and start making money, and as a result you don't want to sell out too early. Now, discipline is required when you're trading. You need to set those sell points, you need to set those buy points, and you need to stick to them. If you don't stick to them, you're going to lose money, and as I said before, you're essentially gambling. Another key downfall that occurs when you've got a lack of experience in the market is that you're not receiving instant gratification. You know, when you work at a normal job, you work 8 hours a day and you'll get paid for 8 hours a day instantly into your account, or monthly or weekly, whatever. But with trading, that's not necessarily always the case. More often than not, when you start trading, you're going to be losing money, and you're going to have to dig yourself out of that ditch with training, discipline, learning new skills. And for some people, unfortunately, that's too much for them. They don't come in with the understanding that this is hard. This is like any other skill. You need to be able to sit there for a few hours a day realistically and study, especially when you're first starting up. Even when you do gain a bit more experience, it's still a full-time job. You're still researching companies, trying to understand trades, picking trades, looking at charts, analyzing them. You're still working full-time like a job. It's unfortunately not a passive income type situation unless you've got dividends coming in. And even so, you still want to monitor them. You still want to know if the company that the dividends are coming from is going to continue to be successful. Thanks for watching the video, guys. I hope you found it useful. If you did, remember to leave a like and subscribe for more content. And remember to chuck a comment down below on what you'd like to see in the future. With that, I hope you guys have an awesome day and happy trading.
Why you not here with me?